Good morning, everybody. Mike Maki, Princetontrader.com here for ntmarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES, and what we saw yesterday was a trend day, trend up day, um, chapter and verse. We broke through 82 early in the day, and the bulls really never looked back. There were no significant pullbacks. Um, it's one of those days where if you weren't already long, and in the room we were long, uh, that it gives you very little or no chance to really get in. Because any pullback, most traders get the sense that any pullback is going to be the pullback, and they don't want to step in too early. And then the reality of it is it's just a shallow pullback, squeezes out more shorts, we go to new highs. We are lingering, though, up around the 94, 95 area. We've got a Globex high of 1796. And my bottom line today is I really see nothing to prevent a move back up to and through the upper band, which is sitting up in the 1801, 1802 area. So whether we pull back a little bit this morning before we go do that, or whether we just go do it, the end result is the same. I think we break through 1800 today. We're headed into a holiday week next week. That always tends to be slow, and it always tends, it almost always tends to favor the bulls. So the seasonal setup is good for just a very slow, lazy grind into Wednesday. Then we're off Thursday. Friday's a half day. That's really where I'm looking. Do we need a deeper pullback? Sure, but the reality is we fail to even challenge the middle band on this pullback. And like I mentioned yesterday when I showed you guys that gold chart, to not even challenge the band was a very bullish development, and the bulls took the ball and they really ran with it for the entire day yesterday. So you need to look at 92 right now. And we're breaking out as we speak here. But here's 92 that is really turning into a floor. Turning into a floor in the overnight. And if that's a floor, then, it really gives the bulls something to reach for. And it gives an area for the dip buyers to come in on a morning dip. I think you have a lot of people that still want to get into this that are concerned it's going to be a much bigger move up. I'm not seeing a gigantic move. I am seeing a move higher, but I'm not seeing a gigantic move higher. I would say no more than 15 to 20 handles before things really get stretched and exhausted. The 45-day pivot, we're sitting, basically 50 handles from there now. Once you get over 60 handles on that, things tend to get pretty stretched. So, but right now, until the bears can push through and hold it and do something that lasts longer than a couple of hours, pull back here. Here's the move down from Wednesday. And this has been your typical bear move. We're going to do 20 handles in about 4 hours, not hold the lows, give 6 handles back before the close, then let the bulls test it overnight, let them create a higher low, and then blow through 82, which was a major area, and then run away with it. Typical bear move. So when you are short, when these quick moves do hit, you have got to take your profits. You have got to get out of the way. And under no circumstances whatsoever should you be shorting in the hole. Hole shorters have gotten blown out in this market consistently. So if you are getting advice or you are hearing people say when we are down on these lows that, we're headed, much lower, get in now, you got to short it now for a move down, and they throw their target out, 10 handles below where we are. Dismiss that out of hand. That has worked so few times in this uptrend that, you'll end up in a 20 handle hole, which is exactly what happened here. 1774.75, 1795.25. These people down here have not had a good week. Don't be one of those people. Okay, everybody have an amazing weekend. I am off to the Traders Expo today to see what there is to see. And if you see me walking around, say hi. And I will be back Monday morning with another webcast. Trade them well, everybody.